Imagine walking out of your divorce hearing confident you've achieved a clean break, only to realize months later that your ex quietly drained joint accounts and left you scrambling to cover the bills. Shockingly, 1 in 4 people admit to concealing assets during divorce, with men twice as likely to pull off these hidden maneuvers. FT.com. What feels like a fair split on paper can quickly morph into a financial nightmare if you don't spot the loopholes they're counting on. In this video, we'll peel back the curtain on 5 covert tactics used to dodge long-term support. Tactics buried in bank statements, prenuptial fine print, and even state residency rules. By the end, you'll know exactly what to demand in your settlement, how to unmask any smoke and mirror moves, and what questions to ask before you sign. Stick around, because missing just one of these sections could cost you thousands in alimony, child support, or hidden debt. Let's dive in. Within weeks of filing, some spouses quietly siphon cash from joint accounts, leaving a hollow estate for the divorce settlement. You might log in one evening and see your balance cut in half, or even wiped out, while your ex claims ignorance. Surveys show 1 in 4 divorcees admit to hiding assets, from stashing cash under the mattress to funneling funds into secret accounts. Investec.com. In high-asset cases, nearly 2/3 of betrayed partners believe their ex concealed wealth during negotiations, trapping them with debts and no way to recover. Law.com. Courts frown on this behavior, but proving it often requires forensic accountants and a mountain of paperwork. If you don't catch the drain early, reviewing every statement for unexplained withdrawals, you'll hand over your fair share to an empty bank. Stay vigilant. Running baseline audits on all joint and personal accounts before negotiations begins is your best defense. But that's just the start. More tactics lie ahead. What if your ex suddenly retires, just as divorce talks begin? Quitting a job, slowing business, or funneling paychecks into a side venture can slash the income you count on for spousal or child support. It's not uncommon. Many people underreport earnings, skipping overtime, parking cash tips, or delaying bonuses, to make themselves look poorer when the court does its math. Martinlaw.com. In other cases, a spouse will cozy up to underemployment, deliberately taking a lower-paying role or returning to school without a clear career plan. On paper, their income plummets, so do your support awards, despite their potential to earn far more. Courts can push back by imputing income based on past salaries, education, and local job markets. But that requires filing motions, hiring forensic accountants, and piling up legal fees. RaymondJames.com. Business owners have even craftier moves. They inflate expenses, hire phantom employees, or pause invoicing until after the decree lands. Suddenly, their company's cash flow dries up, and your share of marital assets shrinks with it. Spotting these tricks means digging into tax returns, bank statements, and vendor records, early and thoroughly. Loopholes.com. Knowing this tactic exists is your first line of defense. Demand full financial disclosures, insist on independent valuations, and don't let a sudden income drop go unchallenged. Because if you miss one side of the ledger, you could be stuck paying the price for years to come, and that's just the beginning of what they've got up their sleeve. Imagine signing away your right to financial support in a single breath, only to learn years later that a buried clause in your prenup bars you from seeking a dime. In most states, premarital agreements can include broad waivers of spousal support, and courts will enforce them as long as both parties had counsel and full disclosure at signing. AXI Foundation and Wikipedia.org. That means a no-support provision tucked into your prenup could leave you scrambling for stability if your circumstances change, like a health crisis or career setback, because you contractually gave up that safety net before you even said, "I do." But these waivers aren't foolproof shields. Judges sometimes strike them down when they veer into unconscionable territory. In California, for example, any clause limiting alimony must meet strict formality requirements, and courts can sever unfair terms that would force a spouse into public assistance. NISB8.org. Blanchrome.com. Still, challenging a support waiver involves costly litigation and uncertain outcomes. If you don't spot the red flags, like caps on support that don't account for inflation or life changes, you could be left footing your own bills for decades. And if you think that prenup protections are the end of the story, buckle up, because what happens when separate property starts looking marital? When inherited money or personal assets find their way into joint accounts or marital projects, what was once untouchable can instantly become fair game. Picture inheriting a hefty sum, then using it to renovate the family home. By depositing those funds into the joint mortgage account, you've effectively commingled separate property with marital assets. JustIA.com. In the eyes of the court, That inheritance loses its separate label and is subject to division just like any paycheck or joint purchase. This tactic doesn't only grab windfalls, it's equally powerful for those with premarital savings, real estate, or even business interests. Every dollar you pour from a solo account into a shared one blurs the line between mine and ours. Judges may still try to trace the original source, but doing so demands detailed records, bank statements, transaction logs, and expert testimony to untangle the threads. Cardowny.com. If you can't prove that you preserved the asset's separate status, by keeping it in an individual account, documenting its use, or securing a judicial order, those funds can be counted against you in alimony or property division. For someone looking to diminish support obligations, commingling can be a stealthy way to rebalance the ledger. By turning separate wealth into marital property, they effectively reduce the pool of exclusive assets and shift the focus back onto shared resources, where your claims might feel diluted. To guard against this, insist on clawback provisions for any commingled sums in your decree and demand clear accounting of each asset's origin before you agree to terms. Overlooking this step could mean trading one money pit for another. Only this time, it's buried deep in fine print accounting and forensic audits. Imagine discovering that your ex slipped across state lines, established a 6-week residence in Nevada, and filed there to dodge alimony rules you'd never even heard of. Residency requirements for divorce range from 6 weeks in Nevada and Idaho to a full year in states like New York. And understanding those timelines can mean the difference between a decade of support payments and none at all. Wikipedia.org. By carefully timing a move, sometimes even a temporary rental or hotel stay, some spouses trigger lighter support guidelines or shorter payment terms, effectively forum shopping their way to a friendlier courthouse. Forum shopping doesn't stop at alimony. Parents can switch counties to influence child support formulas, and high-asset divorces may shift to jurisdictions with looser rules on property division. One former spouse recounted how his ex secured custody and a lower support award simply by claiming residency in a neighboring county just days before filing. Reddit.com. Courts can fight back, but overturning a proper filing often means extra motions, higher legal fees, and months of delay. Time your ex counts on. Insist on verifying your spouse's bona fide domicile with lease agreements, utility bills, and tax returns before agreeing to venue. Because once the papers are filed, contesting the location can feel like chasing a ghost, and that's a battle you don't want to lose. Now that you've seen how draining accounts, slashing income, hidden support waivers, commingling assets, and forum shopping can all be weaponized against you, it's time to take control. Don't let a crafty clause or a last-minute move cost you thousands down the road. Insist on full transparency, demand clawbacks for any commingled funds, verify true residency before venue fights, and challenge any sudden income drop with solid documentation. Which of these tactics surprised you the most? Drop a comment below and let me know. Your insight could save someone else from a nasty surprise. If you found this breakdown eye-opening, please like the video, subscribe to the channel, and hit the bell so you never miss our insider strategies. Your support helps us keep digging up the financial truths that matter. Thanks for watching, and I'll see you in the next one.